Hello and welcome. This is Business Incorporated coming to you live from Lagos. Thank you for joining us. I'm Chimeze Obi Iwago. On the program today, South Africa's Anglo Gold Ashanti plans to lay off 8,500 workers. Ghana signs a $10 billion memorandum of understanding with China to develop its bauxite industry. Plus, the World Bank expects Zambia's economy to grow by 4.1% in 2017 and close to 5% by 2019. Let's get started now with the markets. And here in Nigeria and, of course, South Africa, the markets there have continued to trade in the green in the second day of trading after the Ramadan holiday. The NSE index was up 0.39% at intraday. The JSE index was up 0.05%. Egypt is closed for a public holiday, while Kenya closed in the negative on Wednesday, but trading is on today. In the Middle East, banking shares in the United Arab Emirates were generally weak in early trade today, even as at midday, despite a strong performance by their global counterparts. The prospect of higher interest rates from central banks around the world, including Britain and Canada, bolstered banking stocks overnight and helped the S&P 500 score its biggest one-day percentage gain in about 2 months on Wednesday. Banks were also strong in Asia on Thursday. But in Abu Dhabi, the only lender to rise was Abu Dhabi Islamic Bank, up 0.3%. Union National Bank was the worst performer, retreating 3.6%. The Abu Dhabi index was down 0.31% at intraday. In Dubai, investment from Shua Capital was the top performer, up 2.7%, while the largest listed real estate developer, MR Properties, gained 0.4%. The index dropped 0.02% at intraday. Markets in Qatar and Saudi Arabia remain on holiday for the Eid al-Fitr celebration and will open on Sunday, July 2. Moving now to Europe, where bourses there were mixed in mid-morning as investors awaited a NATO meeting of defense ministers and digested major buyback plans from some of the U.S. biggest banks. Let's talk to Conrad Busen now, my colleague in Frankfurt. Hello, Conrad. Good afternoon. Thank you very much for joining us.
Good afternoon, Timmy. Thanks for having me back.
Right. Our shares of the banking sector are in demand on the European markets today. They are benefiting from developments in the United States, where banks passed the second round of the Federal Reserve's stress test. So is the financial sector finally leaving the financial crisis behind?
Well, clearly, Jimmy, this is another signal that the financial crisis is more and more left behind by, the participants of this financial sector, mainly the banks. And that's, of course, good news for investors because it means that the American regulators, after all those banks in the United States passed the stress test, made room for higher dividends and also for share buybacks. And that's why the shares of the American banks are in demand, but also many banks here in Europe, their shares today are, on the upside. And also here in Europe, recently we've been getting more and more signs and, little pieces of news that indicate that also for the banking sector in Europe, the bad times are over, or at least more slowly and step by step left behind. Yesterday in the Netherlands, the parliament passed legislation that scrapped caps on bonuses for bankers. And also this week in Ireland, the large Irish bank, allied Irish banks that had to be saved with billions of euros of taxpayers' money during the financial crisis, returned to the stock market. All this, of course, means that, for the banks, times have become a bit more normal again, or they're about to become a bit more normal.
Well, incidentally, looking behind you, we can see the DAX is sharply down at this time. But let's look at the European currencies. Both the British pound as well as the euro are up after surprise comments from the Bank of England's Governor Mark Carney were interpreted as a hint that he is moving closer to a vote for a rate hike. Is this serious? How probable is it that interest rates are going to rise in Europe?
It's not very probable, Jimmy. It's true that what Mark Carney said today sounded a bit like an about turn compared to what Carney said only last week in London. Remember, after the Bank of England left the key interest rates at super low levels, Carney last week insisted that due to the Brexit-related uncertainties, this was not the time to raise rates. While yesterday at this meeting of monetary policy makers in Portugal, he said that the case for raising rates in the UK may strengthen in the coming months. But he also added a few conditions. For example, he said that wage growth would have to pick up as well as business investment. But let's not forget, the Bank of England as well as the European Central Bank also have still their extraordinary monetary policy measures in place. Month by month, they are buying assets on the markets for billions of euros, and this is what eventually might be phased out a bit more quickly than maybe some people on the markets had thought, because of the stronger economy. And this is what's pushing the currencies up, both the pound sterling and the euro. And well, as you know, the German DAX, the companies in this index, among them are many companies that depend on exports, that make a lot of business in dollars. So for them, the higher exchange rate of the euro is not so perfect news. And that's why, as you said, you know, the DAX is plunging to the downside today. Right.
Now, there seems to be a week with many food-related IPOs. In Germany, a pizza restaurant chain came to the stock market. In the US, the milk kit maker Blue Apron. And of course, tomorrow, Delivery Hero is expected to have its first trading day in Frankfurt. Other stock exchange is food, the new big trend for investors. Wondering if you like food too.
One could say so, absolutely, Jimmy. But I also have to say, if investors really want to hop on that train now, they should really take a very close look at the business models of those different companies, because the business models are very different, despite the fact that they all have to do with food. Vapiano is really a restaurant chain of pizza restaurants that wants to use the money to expand in other countries. At the moment, it's mainly operating here in Central Europe. Then Blue Apron in the United States, this is a company, you know, that sells little boxes, and those boxes contain recipes and ingredients for meals that you can cook at home. While Delivery Hero, the company that is expected to go public and come to the market here in Frankfurt tomorrow, this is a company operating delivery services for food, and they organize internet platforms worldwide where restaurants can, you know, offer their delivery services. And given those very different business models, the reception of those business ideas among investors is also very different. Vapiano, the IPO went okay, but they had to lower the amount of money that they cashed in. Also Blue Apron, they cashed in $300 million less than they had originally planned. While Delivery Hero, on the other hand, the order books for this IPO were already closed yesterday because there was so much demand for the shares. This already is quite a success for this company.
Right, we'll sure keep an eye to that IPO by Delivery Hero for tomorrow, Conrad. Don't forget that. Well, do enjoy the rest of the day.